Good morning. Good morning. Today is Tuesday, October the 10th, 2023. Just tapping in with you on the real estate. A couple of things caught my eye today. First, the home builders association, I believe the mortgage loan association sent a letter to Jerome Powell, the head of the Fed, asking him to stop raising interest rates. So, there's a couple other organizations as well that kind of signed on to the letter. But, it's very interesting that they're, putting it out in the public and making a public demand for him to stop raising interest rates, because inflation is not where the Fed wants it to be. But this is causing an issue in the housing market. The housing market is at a standstill. I mean, when it comes to traditional buying and selling, where you go list your house with a realtor and you go get qualified for a mortgage to purchase a house, interest rates on the buyer side are elevated and making it the least affordable that has been in a long time. And then on the other side of that, you have sellers that are just going to stay in their house because they have a lower interest rate and they're just not going to sell to go somewhere else, to use up all their equity to put in a down payment and to be paying more a lot of times per month. So I guess the traditional housing market is at a standstill. So that caught my eye, that they actually sent him a letter saying, please don't raise interest rates. We'll see what the response is, because they're not at where they want to be. The Fed is not where they want to be in terms of inflation. They still got significant amount to go to kind of get to that 2% target. So it'll be interesting to see how that plays out. And then the other thing, I saw an article about Social Security benefits likely to be cut. That's going to have a tremendous effect, on the economy, on people's situation, especially older people who, obviously need that money to make their monthly payments. If they are still in a house that has a mortgage, obviously it goes to that. So that's something to watch. I'll attach that article if you want to read it, but some people are predicting that by 2033, that'll be bankrupt. Social Security will be bankrupt. So, mentioning that for two reasons. There may be some opportunities out there on the real estate side to help, older homeowners who have, a home. Maybe you can turn that home into a cash flowing asset, to assist with, the shortage of your benefits getting cut. And you can do that by creating a note on the property, doing some type of seller financing on it, where you get yourself a down payment, you get yourself a monthly payment, and then you or your estate are still owed a significant amount of money in the future. And if you have to move somewhere else, obviously the money that you're now bringing in by creating this note can go to wherever it is that you're going to have to move to. So that might be some opportunity. And the other part of it is that people that are Gen X and after, because a lot of this, a lot of the Social Security being cut is going to have a big effect on baby boomers, because they're collecting it now and coming up in the next 10 years to collect it. So this is going to affect potentially some Gen X, because I think Gen X starts in like 1964 or 65, something like that. So people that may be my age in their mid to late 40s may want to look at some other options in terms of your retirement account. Look into doing a self-directed IRA type of account where you have more control. Because if they're starting to cut Social Security benefits for baby boomers, can only imagine that it's going to get worse for generations after that. So doing a self-directed IRA and having more control, more things that you can direct your money to invest in, is something that you want to do sooner rather than later. And just having a focus on what your retirement plan is going to be outside of maybe a Social Security or even pension. Because if they're coming after Social Security benefits, I can only imagine, pensions are going to get affected as well. And if you do any type of research on pensions, you will see that they have issues. A lot of them are underfunded, just depending on what state you're in. But the research shows that they are underfunded. A lot of times the pension funds and some of these other retirement accounts that you have are really tied up into large commercial real estate. And if you've been following me, you know that commercial real estate, or if you've just been following real estate in general, you know that commercial is having a lot of issues. And how that's going to play out is going to have an effect on some of these pensions and some of these other types of retirement accounts that are out there. So just try to do your research, prepare yourself, make some adjustments. You probably, if you're, like I said, my age or a little bit younger, a little bit older, you still have some time before you're thinking about retirement, and you can do some different things. And what we talk about, real estate notes and note investing, it's a great place to be, especially during this particular time with all this is going on and where the economy is heading and things going on with banks and stuff like that. So do your research about real estate notes, potentially look at it as a way to use your retirement account to take more control of it. So if you have any questions or anything, I'll be back 12:30 today Eastern Standard Time on Instagram at Abundant Capital Group. You can ask me any questions that you have, and we'll get them answered. And then later on tonight, I'll go live maybe around 8:30 just to answer any questions if you're not able to jump on this afternoon and you have questions regarding the market or real estate note investing. So I'll talk to you a little bit later. Have a good one.